Well, happy Monday to you. I'm Marlon Bowling with you, and I'm your tour guide to the ag commodities. Okay, this could be a bit of an exciting ride today to wrap up the month of October. Boy, what a way to finish with a newsy weekend like what we had. Janet alluded to that in case you missed it earlier in the broadcast. Of course, there was a lot of activity in the Black Sea region. There was some attacks on some Russian ships in a harbor in Crimea, and that prompted a response with Russia over the weekend saying we're not going to honor that grain export deal where they guaranteed safe passage for grain shipments out of Ukrainian ports anymore. Well, that sent the markets into a crazy atmosphere over the weekend. And as Janet mentioned, we had some much higher trade in the wheat. Now, this morning news came out from at least one wire service that supposedly at least 12 ships loaded with grain did make it out of Ukrainian ports. That's according to one story that I had access to this morning. Supposedly over 300 and some thousand tons of grain were included in those ships as they made it out. Now, from what I have heard, there were over 200 and some ships that have been stranded in that Black Sea region around Ukrainian ports. So there is a lot to unfold here yet. Maybe those ships made it out, but if Russia is not going to guarantee safe passage, now what? Let's bring in Brian Hoops, and he is the president of Midwest Market Solutions. We'll try to sort this all out. Brian, thanks for joining us here this morning. Have you heard anything with later facts than what I just quoted there, with maybe a few ships squeaking their way out of there before it gets too late?
Yeah, good morning, Marlon. It does sound like we're talking about approximately 2 million metric tons of corn and wheat being shipped out through that corridor now being shut off. And so that's what the market is reacting to, is the fact that maybe some ships did escape or make it out before this all happened, but there is going to be a lot of grain that's trapped now. And so, of course, the market's hoping that we get some of that export business. We really haven't gotten a lot of it, especially for wheat during the last winter when the war was intensifying. But we've heard news this morning that Russia is sending missile strikes into the Ukraine, trying to shut off their electricity and their water supplies. And that's what their main targets are right now. So if anything, the war is intensifying overseas. And so it doesn't look like there's an end or a resolution anytime soon to this. And so, maybe this wheat market hasn't really taken off and rallied overnight. In fact, maybe we go back and fill the gaps or run some stops below the overnight lows. But at some point, wheat will probably try and take another leg higher. And I think that, if we do start to see some weakness early in the morning, I think there will be some buyers stepping in because of the anticipation that this conflict will continue for quite some time.
So let's take a look at these quotes provided by Bar Chart here, and we'll just kind of walk through everything. Now, of course, Ukraine is a big corn producer as well. And so corn rebounded overnight. We had December corn finishing up the Globex trade at $6.94.5 this morning. That would be 13 3/4 cents higher, and that was leading the charge on all the contract months. In other words, it was front loaded with the most strength. Now, as we look at the soybeans, they're not nearly as big a producer of soybeans on the world stage, and November soybeans were up 8. January actually finished up overnight 7 3/4 higher at 14.08. Some analysts consider that to be actually more of a follower of the wheat and the corn overnight. Now, looking at the wheat trade Brian was just referring to, December Chicago wheat, wow, 45 1/4 higher this morning at 8.74.5. But even then, we're still talking, it was almost 20 cents off of its overnight highs. It actually got up within 7 cents of hitting $9 overnight on that December contract. Likewise, in Kansas City, big moves there. We had December 41 higher this morning at 9.66 per bushel. But that's actually only 6 cents from the low of the overnight trade. It's off of its overnight high by about 16 cents. So it had a very strong rally going at one time. Now, in the Minneapolis wheat market here today, we had the December finishing up the overnight trade 36.5 higher at 981.5. And in the cotton market, what did it do? Well, it was kind of quiet, down 33 points at 71.78. Oh, there's so much more to talk about this week. We have the Fed coming up too later on this week, so we'll talk about that. some of the outside markets. We'll get into livestock. Oh my gosh, there's a lot. We'll come back in a moment. Well, as I mentioned, we're talking with Brian Hoops. Let's explore some of these outside markets here. Brian, we'll take a look first at the Dow, see what's going on overnight. Dow Jones Industrial Average, we have December futures actually down 156 points at 32,740. Of course, like I mentioned, about midweek, we'll get the Fed announcement on what they want to do with interest rates. Now, on the dollar index overnight, it's starting to firm up. It had a fairly wide range of about 800 points or so, but December is now 589 points higher at 111.195. Sometimes that can cause some problems for ag export potential. Crude oil trade, West Texas crude, look at December now dropping $1.87 at 86.03 per barrel. That's off its overnight high by about $2.50 and then some. Meanwhile, the diesel fuel prices overnight, let's take a look at December. It's down 2.2 cents at 372.3, we'll call it. And on natural gas, of course, a lot of concern about natural gas situations all across Europe. December natural gas futures were 53.9 cents higher at 622.3. Okay, now on to how we finished on the livestock trade on Friday. We had the December live cattle finishing 42 lower. We wrapped up the week at 153 even, closer to the low of the day than we were the high, but it was a pretty narrow range. Feeder cattle, well, it was mixed. We had January 7 cents lower Friday at 180.37. The deferred's just slightly higher. And on the lean hogs, we had the December contract 97 cents higher at 86.10. It was closer to its high than it was to the low. Brian, let's talk about this setup for the livestock trade for this week. Now, it's the last trading day of the month. Does that mean anything when it comes to ag positioning here?
Well, typically it does. We have so much going on this week. When you get to the end of the month like this, usually you see some position squaring. It seems like mainly in the livestock markets, hogs and cattle. You've got the Fed announcement this week, probably raising interest rates again. Big unemployment numbers coming out on Friday. So a lot of really big things that could impact these livestock markets. Right now, we're calling cattle market in the cash anyway, steady to higher. Again, we saw a $4 trade in dress to the plus side last week, couple dollars higher on a live basis. So it really moving in the right direction as far as the cash markets go, and the cutout values have been trending higher as well. So that's keeping packer margins in the green. So we're a lot of this is very positive for the cattle industry. And again, another big slaughter pace last week, 668,000 head. A little bit down from the prior week, but anytime you get over 660,000 head kill, you have to look at that as a positive that the packers are needing some cattle. So, yeah, we could have kind of an exciting day because of what's happening with the dollar and what's happening overseas and some positioning because of the end of the month. But by the end of the week, you would have to think the cattle market is going to be pretty solid, if not moving higher because of the cash markets.
A lot of folks talk about the availability of contract cattle early in the month. We'll see how that affects the trade. Brian, great information. Thank you very much. Brian Hoops of Midwest Market Solutions with us. Janet, we're about ready to begin what promises to be a crazy day.